Hey, bro, you want my top 5 tricks for getting like 3D delts? Actually, I don't even know what the tricks are. I don't even work out, bro. I have no idea. I'm gonna start off this earnings video. This is an earnings video. We've got 1, 2, 3, 4, 5, 6, 7, 8. Nine. I think I got 9 earnings. It's earnings season. I mean, we love it, right? It's earnings season. We're in week 3. It's Tuesday. We know Mondays are kind of soft. We didn't have a whole lot yesterday. A lot of earnings, no big companies today. Big companies, 3D delts, all sorts of stuff going on. Before we get started, Walter Jones jersey, a real Walter Jones jersey. Let me take the hat off. Hi. My name's Cody from Wall Street Breakdown. We've been here for a few months now. We cover Wall Street. Cover this all the time. We are crossing or have just crossed 10,000 views on our channel. We appreciate you people. We love talking about this. You know what? There isn't enough coverage on this. Some of the coverage that is out there, and I don't mean to be harsh, but some of the coverage makes it very, very boring. They use a lot of big jargon. They try to box people out, it seems like. It doesn't make it very interesting. They cover 10 topics all day in a recurring format. It just is what it is. Financial news isn't that interesting, and that's strange because your finances are just so darned important to you, right? So we want to make sure your finances stay in strong working order. We here at Wall Street Breakdown, that's me and Anthony. Anthony's not here, but I reference Anthony as being off screen because he's somewhere in the ether of life right now. We appreciate you guys, and we want to try to help bring a little more pizzazz to the actual Wall Street part, because you know what? Making money's fun. Money's great. If you know how to work with money, money is a fantastic asset. The problem is a lot of people don't know much about money, get scared off of money, find themselves in some sort of a money trap or money pit or debt or some sort of something. And then money becomes something people shun away. They don't want to deal with money. You know what? Money's fantastic. All you've got to do is know how to work with money. Money needs to be finessed. Wall Street, very much the same thing. Takes a little bit of 3D delt. Takes a little bit of foresight. Takes a little bit of luck. But it takes a lot of you being very, very diligent. Thank you for joining us. We really appreciate you coming by and hanging out. And we love your company. You're outstanding. You already knew that, though. So I'm Cody from Wall Street Breakdown. Today we are doing earnings calls from 9 different companies. It was actually a really, really good day in earnings. Down in the description below, Anthony, the other part of Wall Street Breakdown that you don't see because I'm the good face here, right? You guys like looking at me. I'm doing all right. You don't want to see me out with these glasses off. It's terrible. We're going to do, so in the description, you're going to be able to find where you want to go to if you don't want to watch the entire earnings call video. So British Petroleum, BP, Pfizer, Kellogg, Aetna, Cummins, MasterCard, Sony, Electronic Arts, and US Steel. That's ticker symbol X. That's what we're covering today. That is what we are covering. We're going to start off with British Petroleum, BP, one of the largest upstream, downstream, every kind of stream oil producers, sellers that they bring. I'm imagining they conjure it. There's magic involved. They're huge. They do it on the big scale. There's no question about that. BP earnings per share 57 cents, beat the street by 9 cents, revenues of $60.02 billion, beat the street by $10.81 billion. Those are billion dollars for big bankroll. That revenue number is up 27.6% year over year. The little rumors that you're hearing about oil coming back, we've seen oil kind of creep a little bit. Some of these oil companies are coming out with some decent earnings. Some of these earnings are even a little startling to me. I don't see oil really going up past a certain dollar value. But I'm not going to talk about what I think specifically, but I don't see it going up near where it ever was before, right? Like let's get that off the table right away. I don't see it going up past a certain dollar value at some point just because we're so flush in oil now compared to how things used to be, where we thought peak oil was something that we'd already crossed. And now I don't think that's a topic for discussion, but still British Petroleum, a fantastically run company from the very discovery of oil to the retail sales of oil. Their break-even oil price is $49. So they've been keeping that price fairly steady for what they've been doing. So the $49 mark is their break-even price. They are doing relatively well every time that number bumps up over the 50 mark. We've seen that a few times. Doing fairly well, pumping out a lot of barrels a day over at BP. Their Q3 production rose 14%. Now, we've heard a lot of talks about oil. You know, like, they really streamline the release oil. I'm from Canada. I'm from Alberta, the home of the oil sands, right? I mean, everybody that knows anything about oil, yeah, right, like you care, right? But people I know about oil because they work in the oil patch. So we still don't get great prices because there's all these agreements out there, right? OPEC, all these agreements exist to keep prices steady so that when you're importing goods, you're not getting gouged because you don't grow bananas in Canada, right? So you sell oil to somebody for, umpteen number of dollars and sell oil for, pennies over here. They're going to be like, okay, well, we'll keep our bananas and we'll sell you a crate of bananas for $5,000. You enjoy your banana split there, pal. So we don't get great breaks on it. So when there's production rising like this, you definitely see a lot of companies maybe stepping out and thinking that the global allotment of oil might potentially be expanding. This here tells me revenue's up, production rising, and the revenues are up significantly. BP, fairly strong company like usual. When you lead the pack, them, Exxon, when you lead just straight up, tough to bet against you. It always is. It always is when you're at the very top. BP closed the day at $40.67. That's up 2.65%. British Petroleum. Licensed professional financial advisor, please. But can't go wrong in the oil industry, British Petroleum. Just saying. A great earnings call from a company that makes a blue pill that... There's a really good earnings call from a company that hasn't had great earnings calls recently. This is a company that's kind of stumbled a little bit. Like they seem to not have been able to get the footing that they once had about a decade ago when they were a monster in the pharmaceutical industry, and they still are. But they're not that peak company like they once were. They had so much name value because of some of the things that they did have in their roster. Now it's just another kind of company in the top end of the pharmaceutical companies nonetheless, but still. Pfizer reported earnings 67 cents, beat the street by 13.17 billion. That was in line with the street's prediction. That's up 1% year over year. Innovative Health, though, up 10.7%. The oncology department up significantly, 46%. Biosciences up 70%. Net income up 109.6%. I mean, that's a lot of really, really serious categories being up in big numbers, and net income up 109.6%. Pfizer is strong. I mean, they're a strong pharmaceutical company. They just, for some reason, have not been able to find that next generation mainstream drug. And that's what we've been looking for from them, right? We've been looking, they're such an iconic brand. Like, you look at that Pfizer, even the logo, I'm sure you'll see it when you click on the thumbnail for this video. That logo is, I mean, people see that in their minds when they think drug companies, for sure. You see it on commercials. I mean, Pfizer's a big company, but geez, this is a good earnings call. They had a lot of segments up so significantly. I was really impressed with what Pfizer's doing. I'm really waiting for that next shoe to drop and Pfizer to just kind of, go to that next level again. They've got all the other pieces. They've got the trademarking, the brand. They've got all that stuff that's so much stronger than a lot of other companies, a lot of the other pharmaceutical companies that, while they are very strong in their industry, very strong when you talk, buying and selling stocks, but they're not a brand that, people just out here, other people out in the world might not notice. That Pfizer brand, people know that brand. Pfizer, excellent stuff. Kellogg's reported earnings today. Kellogg's earnings per share of $1.05 beat the street by 11 cents. This is a pretty predictable company. Beat the street by 11 cents. That's a beat and a half. Revenues of $3.22 billion. Beat by 10 million, and that's down 0.9% year over year. So you see what I'm saying? Very, very predictable. Doesn't move up a lot, doesn't move down a lot, but operating profit over at Kellogg was up 13%. Again, a very, very predictable type of company, but in this positive marketplace, things are just working to the advantage of even the most stalwart of companies. Kellogg's closes the day 62.53, up 6.22%. That's for just what you'd consider like not top echelon, but still well entrenched, long-term blue chip company, not going anywhere. Like they're not going anywhere. Kellogg's has so much stuff in so many places that move units. It's not going anywhere unless they stop selling food. Kellogg's is there until they get bought or merge or something else. Kellogg's, huge. A 6.22% jump, though, not expected from a company like this. The marketplace love that operating profit up 13%. I can't say that I'm impressed. 11-cent beat on the EPS. That's a strong quarter for Kellogg. Aetna, fresh off CVS, trying to buy Aetna for $66 billion. Aetna reports earnings today. EPS of $2.45 beat the street by 36 cents. That EPS number is up 48.2% year over year. That's huge. Revenue of $15 billion, missed by $130 million. That's down 4.8%. So the revs are down, but the straight cash earnings, and earnings is what we're concerned with, right? Like revs is a great number, but we're concerned with what you're bringing me. Give me my net, give me my earnings. I want to hear finalities. Give me that after tax number. I want to find out what we're making. Aetna's making some money. So Aetna is growing. Net income up 38.7%. The non-GAAP net income up 10.9%. Healthcare is a heck of a business to be in. I mean, Cardinal doing good, United doing good. I mean, we're waiting Cardinal still. We had a United Health earnings call, I believe it was last week, and it was monstrous, right? Aetna, it's great to be in the medical field in the United States, especially when the economy's good, especially with the potential of this Obamacare thing. I mean, there's so much with that. I'm not going to assume I know where that's going to be. Is it ever going to be finalized? There will never be a finalized healthcare. It's always going to be juggled around. They talk like, oh, we're one step from anything. We're not. Aetna, though, in a great marketplace in that healthcare industry. Are they going to be bought by Amazon? Amazon's got 12 pharmacy licenses in the United States, in different states. There's a reason CVS went for Aetna. There's a reason they went for them. Nobody believed it was going to happen. Nobody believed CVS was going to actually be able to do it. $66 billion, though. Is Amazon coming for Aetna? Or is Amazon coming for one of the competitors? You got to think that's a good quarter. That is a marvelous quarter. That's got to raise the eyebrows of CVS and Amazon and anybody else thinking of hedging their bets similar to CVS, with Amazon on the precipice of entering at least the pharmacy business as far as we know. Who knows where it'll go at the end of it. Cummins, they make all sorts of engines and stuff. Yeah, diesel stuff. It's all sorts of, it's work stuff, work related. I have very dainty hands, ladylike hands. I don't like getting my hands dirty. It's not healthy to get your hands dirty, is what I've learned. There's other people you can pay to do that. Cummins makes stuff that gets your hands dirty. I'm not about to broach their workspace, but I will tell you that their company is one heck of a good company. $2.71 was the EPS. That beat the street by 24 cents. Revenues of $5.3 billion. That's a lot of diesel engines. Beat the street by $510 million. That's up 26.5% year over year. Their engine segment up 26%. Their components section up 34%. Power systems up 23%. It's not too bad over at Cummins. They're a strong company already. They're in a market space where there's very, very few competitors anywhere near their size. They have contracts with basically anyone that does anything remotely close to what they're doing. They always make good stuff. It's really, really difficult to say that I don't trust the company. Are they a little overvalued, closing the day at $176.88? They dropped 1.92% despite this earnings call being fabulous. I wonder if Cummins, maybe, it's just kind of expensive. That's my only concern. Great company, really good earnings call. We are killing it today for earnings calls. We don't normally have a bunch of good ones. This has been everybody basically so far. The first 5 we've done. If you're thinking about doing any investing based off what I'm saying, you've been drinking. But please consult a licensed professional financial advisor. Don't listen to a guy on YouTube in glasses. That's just not a good idea. I want you to go out and I want you to find someone that you have good rapport with and that you build a relationship with and you have financial trust in this person, that they have your best interest at heart. I want you to go out and make sure you do your proper due diligence so that you make the most money that you can. You work very hard for your money. Please protect yourself. Protect yourself at all times. MasterCard reported earnings today. Earnings per share of $1.34, beat the street by 11 cents. Revenues of $3.4 billion, beat the street by $120 million. That revenue number is up 18.1% year over year. The gross dollar volume was up 10%. Purchase volume up 11%, and cross-border volume up 11%. MasterCard loves it, just like Visa did, just like American Express, just like Capital One. Everybody that's putting out credit, where they're major consumer, I guess you'd call it their consumer, because they're consuming the credit available, is the United States. It's a flourishing, burgeoning economy. It's fantastic to live there right now, and it's great to find yourself able to procure as much credit almost as you'd like. MasterCard benefits from this till the defaults happen. Again, I would say MasterCard, my concern is the overvalued nature of the stock, not so much the earnings call. Great earnings call. MasterCard closes the day at $148.77. That's down 0.12%. Not really a big drop or anything, but I don't think MasterCard could do anything short of blow anyone away, because they're not the number one and they're pricey. All the credit card companies are pricey right now. They're not the number one. That in and of itself to me says, due diligence, please. If you get it in a basket of other financials, I totally understand. If you were to go out and individually buy a MasterCard, I'd love to hear the reasons, but it's a good, strong company if you earn it right. If you own it already, if you own MasterCard today, I don't see you would have took a little money off the table, you'd be fine. But if you were to go out and get it, you're gonna wait, and then as you wait and it comes back, you're gonna wait to hear defaults and economy changes and stuff like that, and then it could really come back, right? So MasterCard, licensed professional financial advisor, you know better. Sony had earnings today. Sony had unbelievably good earnings. Sony. I thought Sony was done, right? They do the PlayStation. They make some movies. Sony. EPS of 90 cents. Beat the street by 36 cents. Revenues at $18.25 billion. Okay, I say Sony's gone, but we know that Sony's around, but it's not what it was. There was a point in time where Sony was it. If you would have assumed a company in 1987 or in 1995 in the technology industry that made technology that you could touch in your hand that was going to be the company, I would have assumed Sony. I think a lot of people would have been these companies that would have took on that next level of technology. Sony broke in a lot of technology. You got to remember that. It hasn't happened in a while, but they broke in a lot of big stream technology. The Walkman is Sony. Sony is huge. They had the best fiscal year of profit ever. This year, Sony did. For profit, for the money, they're not destroying rev. They're a big company, but they're not murdering the rev numbers. But they're making money hand over fist. They have streamlined that business so precisely. It is working out for Sony. If you're a Sony investor, you got to be pretty happy about what Sony's doing. Operating income up 346%. I'm not going to take my glasses off, but number, 346%. That's like a misprint. That can't be right. I don't have a teleprompter. That's just in my mouth. 346%. That's what's out there. They beat that number, operating income, by 346%. It's unbelievable. They're beating record segment sales set by the PS1. They did that this year. The PS1, the record set by the PS1, that's in 1995, 1996. They're doing that right now. They're beating it in segments. They're beating it, destroying segments that are relatable to that PS1 with the PS4 and hardware and accessories. They're beating it for the first time ever. This year, they're beating it by over 20% in most of those categories. Over 20%. That's their record stuff. That was their bread and butter. That, while other things sold well, that PS1 set it off for Sony. Sony is mauling stuff out there. If this is not on the radar. I can tell you that. I can tell you this earnings call didn't set off any kind of mainstream media coverage. This is a big number for Sony. This was a huge earnings call. I seen this morning and I was like, is this real? I thought I was being trolled on this earnings call. But it is what it is. Game and network services up 35.4%. Music at the Sony label up 37.5%. In the movie and pictures up 27%. Home entertainment and sound, that's what they were known for, right? The speakers, those things knocked back in the day, up 28.1%. My friends over at Sony are doing it all right. Licensed professional financial advisors, my friends. This is probably one to look at, just to have on your radar. Sounds like they're coming back pretty strong, wouldn't you say? Not just with the PlayStation. Sony closed the day at 43.41. Pretty tolerable number, too. Up 11.74% on the day. I'm not a fan of intraday trading or trading on the news or trading on the call. Who could have predicted this? But up 11.74%. Not bad over at Sony. Kudos, my friends. Kudos. Electronic Arts, on the other hand, they also had earnings today. Now, while they're kind of similar, because they do touch into what Sony does in the video game stuff, they're completely different. They got smashed on. 62 cents EPS. Consensus was 54, so they beat by like 8 cents. Revenues of $959 million, missed by 221 million. That rev number is down 12.8% year over year. They lowered their guidance. They expect weak holiday sales. Net revenue was up 6.8%. Digital net revenue was up 27.1%. They were up going into the call, up this afternoon, $119.60. They closed that, up just about 2%. They are down 3% right now in the after hours. It's not a good call from a company whose sports segments are still strong, but they didn't do anything that blew anything out of the water. Despite the fact that, like NFL, like Madden or whatever would have came out, hockey, basketball, all that stuff would have been in this quarter, I imagine. I'm not sure if basketball's out. I don't play video games. I'm not entirely sure if that's out. But football and hockey, I definitely know are. There's a guy outside in this other room right now that's playing at least one of them. It didn't blow anybody away. That was the problem. Is that they're not doing anything that's blowing anybody away. They're not doing Activision Blizzard stuff. We'll just put that on the table, right? They're not Activision Blizzard. They're a really good name. But if you're picking best of breed, yeah. U.S. Steel is the last earnings call of the day. And another great one. Seriously, the only bad earnings call that we had today was EA. MasterCard, maybe a break even, right? EA was probably the only one that was a bit of a disappointment. U.S. Steel, killing it. U.S. Steel earnings per share at 92 cents. Very predictable company. Again, I remind you, beat the street by 22 cents. Revenues of $3.25 billion, beat by $190 million. That rev number's up 20.8% year over year. Even U.S. Steel was shocked with their productivity. They said in the call, they were like, things just worked. I mean, I guess all their plants, things were working. Everybody was showing up for their shifts. Nothing was breaking. It was just dandy. Like, sometimes it just all works out when you're a good, solid, well-run, efficient company. You're doing stuff consistently all the time. U.S. Steel been around forever. Ticker symbol X, in case you didn't know. U.S. Steel is one of the originals. And they run a tight ship over there. And sometimes everything falls in line for you. And even a company as predictable as them have excellent quarters, well beyond expectations. Their net debt went down $200 million. That brings it to a very, very easily managed $1.2 billion over at U.S. Steel. It's been way higher than that before. All segments, they said, are operating well with better than expected results. They closed the day at 25.32. That was down 4.31%. People were not expecting a good earnings call at a U.S. Steel. Why? I'm not entirely sure, to be honest with you. But they weren't expecting a good one. In the after hours, U.S. Steel finds themselves up just about 8%. So they've turned that around and then some on an earnings call that is excellent. What a day for earnings calls on Halloween. Very, very spooky how good these all came out. But when you're living in the times that we're living, and you don't know it now, but we will look back. We'll look back to 2017, 2016 actually. We'll look back 2015 as some of the most prosperous years of my young adult life. I'm young. You mind your business. Of my young adult life. We don't know it. We're not seeing it now. A lot of people aren't seeing it now. I guarantee you. This kind of stuff just keeps reiterating it over and over again. Marvelous earnings calls from some of the biggest companies in the free world. We love it. We love seeing the economy doing well. We hope your finances are doing well. I'm Cody from Wall Street Breakdown. If you haven't already, click the subscribe button, notification bell, thumbs up for this video, thumbs up for all videos, thumbs up for you. You guys are excellent. We love being here. We love discussing finances with you. Comments in the comment section. We love hearing from you. You guys have yourself a marvelous day. We'll see you tomorrow in November. Oh yeah.